We start with Equity Bank, who have nearly doubled their half-year profit after tax as earnings rose by 98% to 17.5 billion Kenya shillings from 9 billion last year on improved income and lower costs. According to CEO James Mwangi, despite the COVID-19 pandemic, they've been able to reduce costs by leveraging on digital platforms.
The improved performance is on the back of increased customer deposits, which grew by 51% to 820.3 billion shillings, while the assets increased by 50% to 1.119 trillion shillings. Even with the pandemic, the bank managed to register an increased loan book by 25% to 504 billion shillings.
Profit before tax jumps from 12 billion shillings to 23.8 billion shillings, a 99% growth rate, with the tax paid out increasing from 2.9 billion shillings to 5.29 billion shillings, a growth of 103%, leaving shareholders with a profit after tax of 17.9 billion shillings, up from 9.1 billion, a growth of 98%.
However, Mwangi did not write this off as a one-off performance, adding that the bank's business in the DRC had registered marked improvement. Equity BCDC of Congo saw its deposits grow by 282% to register 274 billion shillings, while its loan book also grew by 88.7 billion shillings, representing a jump of 160%, with its profits soaring to 1.6 billion shillings, an equivalent of 447% increase from last year.
We predict that the group will continue to outperform, and that is what explains why we revised the 2021 outlook. We didn't expect that the market will normalize that quickly, that COVID will become part of our life. While COVID was really a phenomenon for all us.
Despite the bank's share price doubling over the period, investors will however have to wait a little longer for dividends. Elsewhere, CDN Bank had reported an improved after-tax profit of 274.8 million shillings this year from 85.8 million shillings, backed by a 48% reduction in loan loss provision and an increase in net interest income over the period. Faisal Ahmed, Citizen TV, Nairobi.